So welcome everybody to this newly adapted webinar. We have experienced technical issues with the live link for the live webinar part of this. So this is going to be an on-demand webinar. We're recording it as if it was live, and we'll carry on doing that, but it will be sent out to everybody who registered once this webinar finishes, once we finish recording it. Apologies for that technical issue, and hopefully you still get the same great information that you would have done, and you can listen to it in your own time as well. So a very warm welcome from me, from Spend Matters, and also from TransferMate. My name's Jenny Drapper, and I'm the General Manager of Spend Matters across Europe. And I'm also head of all of our client services at Spend Matters. And I will let my lovely colleagues from the TransferMate side and their customer introduce themselves shortly. So to the topic of this webinar, how to streamline the purchase to pay cycle for better supplier relationships. Something I'm particularly interested in from the Spend Matters side as well. And I'll tell you a little bit more about that in a second. We had some housekeeping rules on if it was going to be a live webinar. It was going to be live streaming, but of course now it's just going to be recorded. The Q&A, of course, that won't be relevant for this, and I would dearly love you all to submit your questions to us once this webinar's finished, if you have them, and of course we will answer them via email. But we do have 2 questions already that were submitted beforehand, so I will ask those questions to our panel at the end. And as you will already know, these slides will be available at the end of the webinar. So just a little bit about who Spend Matters is here, because this might be a new name for some of you in this area. So Spend Matters is a research and analyst organisation. We're headquartered in Chicago, but we're global. And we cover the source to pay technology space. When I say we cover it, we actually tear it apart. We tear apart technology on a function and feature basis to the greatest degree. We offer our opinions on it. Not only that, we also rank and rate technology, whether it's from spend analytics or sourcing or contract lifecycle management, all the way through to payments. And I think what's interesting for us now is how important payments is becoming, not only from the financial side, but also from the procurement side as well. And that's why at Spend Matters, we have really upped our coverage of this area over the past 12 months effectively. We have about 10,000 people looking at what we're reading every day at Spend Matters. So if you're interested, please do have a look at what we're talking about from our editorial or analyst perspective, and you can go to spendmatters.com to read about that. And this is how we cover the B2B tech vendors for payments. We do it in a category basis, whether it's from an accounts receivable area, third party, the payables, all the way through to the card networks and the cross-border enablement as well, and the early pay innovators. We have analysts that solely cover this area for us, write about it, so there's lots of deep information around vendors in this space, and of course our analysts just love to uncover new technology all of the time. So that's a little bit about Spend Matters, who we are and what we cover. Let me go on now to our panel. So I'm going to ask Warren and Mathew to both introduce themselves so that you know that they are absolutely the experts in this area. So Warren, I'll start with you. Please, could you introduce yourself?
Thank you very much, Jenny. My name is Warren Keogh. I am a chartered accountant and I work for RSM Ireland. I'm a director in the management consultancy unit within RSM Ireland. I've worked for RSM nearly 11 years now. RSM Ireland is part of there's a powerful network worldwide of audit, tax, consulting experts. RSM have a presence in 120 countries. I think globally we have about 43,000 staff and about 810 offices. Within the management consultancy unit, we provide a wide range of services such as technology consulting, transformation, HR and change, outsourced business services. For myself, I have specialized in the last 11 years working with foreign direct investment clients, people from all over the world who have decided to set up a business here in Ireland. I'm sure your listeners know that Ireland has been very successful in attracting some of the top companies in the world to set up bases here, typically to service the European market. But we have worked with companies of all sizes and scales who have been establishing themselves in Ireland and taking advantage of that.
Wow, I think it's that's really interesting. I think, you know, it, as you referred to, it's been such a busy hub, if you like, that interaction between you know, UK for a start and Europe. So I'm really looking forward to hearing about your experiences, Warren. And Matthew, if you would do the same, please, and introduce yourself.
Hi, Jenny. I'm Mathew Gunning from TransferMate. I look after API connections, so all API integrations into TransferMate, as well as being a partner manager for a large accounts payable technology called Cooper. So I've been working with TransferMate for over 5 years. And really bringing technology to the forefront of payments and introducing our clients to the technology and how technology can improve their processes within their own company.
That's wonderful, and wonderful to hear if there's anyone from the procurement side there as well, Matthew, that Cooper is a very big name in the procurement space. So that was great to hear. If you just give a little bit of an overview as well on who TransferMate is as an organisation, so just cover that a little bit, that'd be great.
Yeah. So Jenny, so TransferMate is around about 10 years old. We are a globally regulated payments technology that provides a full 360-degree payments and receivables service, essentially allowing our corporate clients to send and receive funds globally via domestic payment rails. So how we do it is really we have one of the widest regulatory license spread across the globe, and that allows us to tap into the domestic payment rails all around the world, utilizing our banking partners. And that allows us to essentially send and receive funds globally without the payments actually having to travel via the international payment system or the SWIFT payment rails.
Wow. And I don't know if you've kind of covered that, Matthew, but there's a slide here about that global regulation, the account details. Is there anything further to say based on this slide? Yeah,
100%. So what we do there is essentially on the mass payment technologies, what we have done is that we've spent a lot of time utilizing API technology and mass payment file technology in order to allow our clients to either integrate directly into us via a RESTful adjacent API, or we actually integrate into multiple technologies like Cooper. So Cooper is a partner of ours. Also SAP Concur for invoice and expense payments. And then we also have integrations into QuickBooks Xero and other accounting technologies, including Accounts IQ. So we really serve the entire market of all business sizes, and we utilize technology to be able to seamlessly integrate with our clients.
That's really interesting. I think some of these points as well are going to come out in the questions that we have during this webinar as well. And I know that one of the questions submitted is very relevant to the whole idea around banks and banks banking fitting in. So looking forward to that. So first of all, what we're going to do with this webinar is we're going to ask a series of questions, and I'm going to ask the questions and put those questions to either Warren or to Mathew or to both of them for their opinions on it. So we've thought quite long and hard about some key questions, 6 key questions that people ask themselves around the payment side of things. So the first high-level subject, if you like, is about containing cost. Keeping cash in the business. So that's our first topic. And we've got a couple of questions on this. And the first question, and perhaps that'll lead into the second question, I'm going to pose to Mathew, actually. So first of all, Mathew, what are some of the main challenges that you see for managing costs in a global business? Let's say you're a global business, and what are some of the challenges that people are going to identify with?
Yeah, so one of the main challenges for companies out there is actually the movement of money around the world. So take, for example, invoices coming into a European company, and it needs to be paid into either China, Japan, Australia, or into the US. And it really is, taking into account that these transactions take quite a long time to go from A to B. And the same is also in reverse. So if you actually have customers in globally, it's remembering that that the invoice might be marked as paid from their side, but it might take a full business week or even longer for the funds to actually clear in your account. And then different countries around the world also utilize different payment methods. So some might be very used to doing bank-to-bank transfers, whereas in some countries, the check still reigns supreme, which you also have to take into account has additional clearing times before you can use that cash. So, that's those are some of the main challenges is really how are you actually sending the funds? How long does it take for it to actually be registered in your in the bank account of your beneficiary? And then also how are funds coming into you? And how long is it taking for those funds to clear in your account so that you can actually use them?
Yeah, and I think you touched there really on about that delays in receiving funds, because if you send them on one day, you might not automatically get there as quickly as you would think they would.
Yeah.
So how can businesses manage costs more effectively if that is the scenario? I'm going to ask you, and then I'm just going to see if if Warren's got anything to add as well. What do you think, Mathew?
I mean, it really is having robust processes in place and the understanding of when funds are coming in, how long they take to clear, what clients pay via what payment types, and if you have a preferred method of receiving funds, are you offering an incentive to your clients to pay you in that way? And also, clients, they would like options. So are you only offering them to pay you? Let's just take, for example, if this is an international payment, are you only offering them an international payment via the global banking network or SWIFT, or are you offering them local payment options? That really does become a huge part of incentivizing your customers to pay you in the way that you want to get paid.
That's a really good point. Have you got anything to add there, Warren?
Yeah, well, maybe just to sort of expand it out. Look, a lot of companies and a lot of people are going through a lot of changes at the moment. It's certainly been a year so far of extraordinary events. So we've had the COVID and the global lockdown and how that has affected various businesses. Likewise, in Europe, we have Brexit, which is coming to a close, so to speak, at the end of this year. And look, what these things are doing and have done is they put businesses under pressure. And Mathew has mentioned ways of speeding up, effectively getting your cash back onto your balance sheet quicker. There's also, the opportunity to look at your working capital management, to look at your balance sheet and see where do you have cash tied up in the business between, accounts payable, between your inventory, as Mathew has highlighted, your payment process, et cetera, et cetera. So I think as businesses are going through such radical changes this year, more and more people are going to be looking to see how can they free up some of this cash and some of this working capital that's tied up in the business.
That's a really good point. Yeah, and it is. I think people have got to become really innovative now in terms of where they're looking at retaining cash, cost savings, and how they move and manage their cash as well. So I think you bring up something really important that maybe people haven't really thought of, particularly given the changing world we're in at the moment. So they're great perspectives and a good intro to our webinar. In terms of those questions. So thanks, both of you. I'm going to go on now to question, subject number 2, really, which is about gaining more control and visibility over your spending. Hot topic for several people, and particularly as well in the procurement side of a business as well. So on with this question: paying from multiple accounts to multiple suppliers who are based in different countries causes problems with real-time data visibility. How can businesses improve visibility over their funds flow? Mathew, I'm going to start with you again there. So have you got any thoughts on this one?
Yeah, I mean, getting real-time data visibility, banks and technologies like TransferMate have really started servicing the market very, very well over the past few years. Essentially, where it comes to improving the visibility over the funds flow, it really comes down to processes within the corporation. Where are their bank accounts located? And what are they using those bank accounts for? So some clients might be using them only for collections and then essentially sweeping them back to their main accounts in their home country or in their headquarter country, and some might be using them for payments in and out within those domestic countries, and then doing a monthly sweep. But it really does come down to technology these days, and having a technology that you're able to essentially plug in your bank accounts, so that you can actually have a complete, essentially 24/7 view over what is where, but also being able to have your invoices, your accounts receivable and your accounts payable all communicating correctly, so that you know what is due out when and what is due in and when. And essentially it all comes down to strong processes and technology, integrating technology into your processes.
What do you think, Mathew? Any thoughts from you? Sorry, Warren, any thoughts from you on this?
Yeah, look, again, in the last number of years, we're seeing an increase in the digitization of processes within business. And, the reason to do that is it's more efficient and it's more timely. It's hard to make the correct decision on what you should do in your business if you don't have the correct information. So, the more that you can get the information to you on a timely basis, it gives you that visibility and to be able to make the correct decision. As Mathew says, look, APIs, it's connecting your systems, getting the feed of data in, removing the whole manual process around that, and getting the output then in a usable format to allow you to move forward.
And I think that's a really good point. And I'm sat here reflecting as we're going here. The whole topic around today's webinar is about improving your supplier relations. And I think, if you have paid a supplier, or you think you've paid a supplier 4 days ago, 5 days ago, and that supplier's ringing you and saying, "Where's our money?" I've worked with businesses that have really damaged their own supplier relationships, because because they have sent the money, supplier doesn't know that the money's on its way, and that has caused real mistrust. And that is all about that visibility, really, isn't it? Warren, perhaps I'll ask you: have you seen that in your experiences?
Yes, absolutely. And especially when you're dealing with a new supplier, or a supplier in a different jurisdiction that may have a different a different payment cycle, and it's very important to try and provide them with the information. So a simple process, as you mentioned, a payment has been made, the supplier doesn't know about it. It's an automatic email or remittance advice sent out to your supplier saying, here's the payment date, and here's the invoices that we paid for you. That builds trust with your supplier when they see the money actually hitting the bank, as you said it has.
Yeah, it's things like that can make such a difference in terms of just helping it's the trust, isn't it, between the supplier and the buyer. So really interesting. Okay, I'm going to move on to question number 3 now, which is assessing and onboarding new suppliers quickly. So we, of course, we're looking at visibility, we're looking at trust with those suppliers and retaining cash. And now let's take a look at it from the supplier's perspective, getting new suppliers on board. And I think I'm going to move to Warren to answer this first of all, these 2 questions. So first off, Warren, can you describe some of the steps that you'll go through to create a robust supplier onboarding process?
Yeah, well, I suppose before you even go through the steps, what's the aim? Okay, so I think the aim is to build a streamlined process, and you want to build a strong relationship with between the buyer and the vendor, because ultimately what you're trying to do is you're trying to use that relationship to improve your business, but ultimately as well to also improve their business, because you need that supplier needs you. Mm-hmm. So look, when you're starting off with a new supplier, it can be complex. Okay, if you don't have clear processes and clear systems in place to onboard those suppliers, it can cause problems down the road with the relationship, and those problems can cost you in cash, can cost you in profits. And so it's something that needs to be considered very carefully. I suppose the first step typically is, what's your vendor selection process? So, you need to establish an evaluation process an approval process for your suppliers. You want to have control. You want to avoid, maverick buying. You also want to be able to give your organization the opportunity to negotiate the best terms possible for your business. You need to be able to establish what are the priorities for this vendor. What does your business require for them to achieve? And I don't just mean in regards to the product or service that you're supplying, but also what's the service level agreement? What are the payment terms? What options are they going to give you around volume discounts, early payment settlement discounts, rebates, etc., etc. I think always as part of this vendor selection process, it's very important that both you and the supplier understand what's required and what's expected. A common tactic is to have a supplier performance scorecard for your key vendors, and to use those scorecards during the negotiations when you're comparing possible vendors, and to use them to try and leverage the best result for your business as part of this onboarding process. Once you've selected and approved your supplier, the next process then essentially would be to capture the data, so the supplier master data. Your purchasing team have gone through possibly a long and arduous process to select and qualify the suppliers. So it's important that this data is captured. So you need to know what are the payment terms that have been agreed. Again, as I mentioned, what are the discounts? Because if you don't have this approach, again, if you fail to meet your payment terms, could be a delay in your supply. It could start the relationship off where the supplier becomes concerned that you're not going to pay on terms, etc. Likewise, if you don't record what the discounts are available are, chances are you won't avail of them. Typically, and you mentioned technology in the introduction. what we're seeing more and more is effectively a vendor portal where prospective suppliers can register and apply to provide services or goods to your business. By having this portal, the vendor themselves is supplying the information, so it's reducing the administration burden on yourselves, and also it means the information is likely to be more accurate. Obviously, once you have that master data, it's very important that it's maintained and updated. So obviously, if the key contact with the vendor changes, it's important that that's updated. Likewise, if contract terms and conditions are changed, again, that is updated. And then it's important as well, then obviously, that when you're onboarding your suppliers, as part of that process, you're looking at a contractual review process. Again, to make sure that both parties understand what is required and what is agreed. Likewise, then it allows your accounts payable team to have a benchmark which they can measure to ensure that obviously the invoices that you're receiving from your vendor are both accurate, and also to avoid possible fraudulent invoicing by vendors if that was to occur. Again, you need to periodically review that. Yet you have your review process. When you're reviewing your contractual review, you're looking to see how did that vendor score from providing the goods or services to your business. Were they meeting their SLAs? Was there a high defect rate? Did the products or goods arrive in time, et cetera, and that allows you then, when you're reviewing the contract, to consider whether you want to continue with that or possibly look at another supplier.
That is, I've got an observation to make as well, but I'm going to wait until I've asked the second question here until I do that. But from a procurement background, I really come from a procurement background. So much of what you just said resonates with me. So in that, and you've pulled up a few things there in terms of like having those discussions and making sure that there's no surprises on either side in terms of that process and what's involved. And what things to agree on. What do you see as some of the common errors which occur in creating a supplier onboarding process?
I suppose one of the biggest common errors we see is just a lack of communication.
Yeah.
And I think, especially having had experience of dealing with people from all over the world, when you are dealing with people from all over the world, people have a different way of communicating, and I don't necessarily mean just the language. Even if the communications are all being done through English or any other language, there are cultural and local differences, and those misunderstandings can cause problems. So I think it's very important when you're starting off the relationship, starting off the onboarding, that it's very clear about the requirements and the expectations on both sides. A poorly performing vendor who either through, for example, because they're not aware of the requirements, it reflects directly on your business, because your business is dependent on those goods or services that they're providing, and if they're performing poorly, it affects you.
Yeah.
Another common problem is where people try to standardize the whole onboarding process, and force everybody into a particular box. From sort of managing a process and automation, obviously the more standardized you can have any process, the better. But we live in a complex world. There are local compliance requirements, local legal requirements, etc., in different jurisdictions, and even within different industries within a country, there are different requirements. You've got to have a bit of flexibility in your onboarding and vendor selection process to deal with those nuances that are required depending on the supplier. And another big problem, and one that is very avoidable, is where you have a robust onboarding process, but it's overlooked, it's not completed. People step around that process. I can remember one example where a customer, a client of ours, had a system that required them to capture a tax number. But what the people were doing when the onboarding was, they were just putting in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So they were ticking a box, but the box was essentially meaningless. And then it was generating a workload at the back end when people ran the reports and realized that these tax numbers were useless. So, you know, the failure to complete the onboarding process correctly, it's storing up problems for you down the road. And, you know, those problems can be serious. I suppose the final one then really would be its failure to sort of track key metrics. So, you know, as I mentioned earlier on, you know, using supplier scorecards to monitor performance, you know, making sure obviously it's on time, defect rate, quality of service, etc. You know, if you don't measure it, well, it doesn't get managed. You know, and likewise, so there's a loss from that point of view, but also there's a loss from the business's financial point of view, because again, if you're not measuring it, well, how do you know if there is discounts available to you, if you've qualified for volume rebates, et cetera, et cetera? You're really depending on the vendor to point that out to you. So again, you know, measure it and then manage it.
Really interesting points there. I think something I see a lot as well from a procurement perspective. It's just as you talked about there, Warren, is, you know, if things aren't done at the time and they're left, either you put in 1, 2, 3, 4, 5, 6, 7 in, you know, it's almost like putting your mobile phone password as being 4 zeros or 1, 2, 3, 4. You know, you're leaving yourselves open to a whole world of problems in that respect. But also, it's about, for me as well, it's about just having to tackle things down the line, isn't it? Rather than getting it all done up front, it's about then having to face those problems when the first payment is due, and certain things weren't agreed when you onboarded. It does create that world of confusion, and again, it's that lack of trust. And I think, you know, I talk from a buyer and supplier relationship from a procurement perspective. You know, we're talking about days now, the 2020s and beyond, where actually the supplier is king and not the customer, because supply and demand dynamics, and particularly, you know, on a category or industry focus, is really shifted. And in many areas, suppliers can choose themselves who they want to provide their services to. So I think, you know, we should never underestimate that, and treating the suppliers in the way they should be treated if you're a buying organisation. So it sounds like you're saying the same thing, really, and you know, just make sure that communication is there and that trust is there in terms of onboarding those suppliers.
Absolutely.
Really interesting. Yeah, great. I'm finding this very interesting. I'm going to go on to the next question now, the next subject, which is mitigating fraud. You touched on it a little bit there in terms of payments and compliance risks in international fund transfers. So this is going to be an interesting one. Got my own experiences there in that area. So question here, and I'm going to put this to you, Mathew. Is international fund transfers expose organisations to fraud and compliance risks? What can businesses do to reduce this risk exposure? It's going to be an interesting question for everybody, this, I think.
Yeah, you know, the way I look at it is that anytime, you know, it doesn't have to be an international payment that increases the risk of fraud. You know, any payment can essentially, any payment to a supplier could have a risk of fraud attached to it. You know, there's a lot of invoice fraud happening at the moment, especially when fraudsters are submitting invoices that they might have intercepted and changing the bank details on them. The accounts payable department are receiving them in, and they aren't following maybe the processes that would have been in place within their organization, changing the bank details, making the payment. And then when the payment's due to the suppliers are saying, sorry, where's our funds? And the corporate is saying, well, I paid them. Yeah. There was a high profile case of that in 2018 with Dublin Zoo, paying, if I remember correctly, it was for elephant feed. And it had been invoice fraud, and the bank details had been changed, and there was 500,000 euros sent over a course of a few months, if I remember correctly. So it really is, reducing fraud is all about, and this comes down to having robust processes in place, but also human contact, because at the end of the day, if you get a request for, hi, can you please change, we're changing our bank details, can you please change them in your system so that the next payment that's due to us is coming into the new bank. If you see a message like that coming in from your supplier, pick up the phone, call your contact within that company and confirm the details. And that is really the easiest way to reduce fraud. And then also, technology plays a part. You could have supplier portals where your suppliers actually would log in and be able to update their bank details themselves, so that when you go to make a payment to them in your ERP systems, essentially those details are up to date, and the funds and the payment gets made essentially to whatever bank details your suppliers inputted there. But that also opens up risk of fraud from the opposite side. If a bad actor gets in on the supplier portal. Yeah. So at the end of the day, whenever bank details are being changed, pick up the phone. This has to be a human to human contact, just to clarify things, and that reduces fraud across the board. You can have all the best technology out there, but at the end of the day, sometimes a phone call is the best thing.
I love that. That's that human contact, as you said. And anything from you on that, Warren? I don't know, is it something that in your career you've experienced where this has happened with organizations you know?
Yeah, so we have certainly seen attempted frauds, and I suppose it goes down to from an audit perspective, the old controls, things like segregation of duty. So, for example, we talked about a master data file for your vendors. Who within your organization has the ability to change that bank details? Is it reviewed? When you're making the payment via, say, a bank, who has the ability to authorize the change in the bank details there? So you have to protect yourself both from sort of external threats and internal threats. And as Mathew says, at the end of the day, my attitude is, if someone, it's to be suspicious. If someone is asking you to change a bank account, don't be afraid to pick up the phone to a phone number that not the phone number that's come in on the email address asking you to change the bank account details. Pick up the phone to someone and say, listen, we've got this email, ask them to please confirm. Because once the money is gone and it goes to certain jurisdictions, it can be impossible to get the money back.
Yeah. I love that advice. Simple, effective advice. Love it. Okay. Subject number 5 now, paying suppliers faster to improve the relationship. I think they'd love this one. So question number 1 here, and I'm gonna go with Warren, if you don't mind. So what are the common errors you see that can hamper a company's ability to efficiently manage supplier payments?
So I suppose that's an interesting one, and in some ways I'm nearly thinking with regards to the question 2 first and then question 1, but yeah. Let's talk through it. I suppose, look, we've mentioned that in the current period there is pressure on people's cash flow, and there can be a sort of a short-term reaction, which is delay payments. Now, this can work and it may be necessary, but delaying that payment, it can erode suppliers' goodwill. Okay, so maybe your goods will be delivered slower. Maybe if there's a shortage of goods, you'll be put further down the list. ultimately as well, like if there's problems, defects or problems, that supplier is going to be slower to come back to you. And ultimately, you do risk, depending on how dependent the supplier is on you, you risk putting that supplier out of business, and then you've got to go and find a new supplier. So, as I say, the initial thought may be, let's slow down all our supplier payments. On the flip side of that, obviously you mentioned, well, then you could be losing out on discounts, early settlements, etc., etc. Now, maybe if I jump onto the second one and then come back to the first one, because I think they kind of flow that way. With regards to paying suppliers faster. Well, basically, to pay a supplier faster, you've got to get the data through your system and approve faster. So, how there's some common techniques you can use that. Issue POs for every new order. Okay. Again, when the invoice comes in, you match it to your PO. It speeds up the approval process. It ensures that the invoice matches what was agreed. That helps. We've talked about technology several times. You're looking at something like an EDI system. Essentially, the vendors submit the invoices electronically themselves. They may even, as part of that process, match the invoice to the PO that you've issued them. So effectively, you're getting the supplier to do some of your accounts payable work there for you, as in they're generating an invoice for approval that's already matched to your PO. And again, that gives the supplier comfort around it, because they know you have the invoice, it's being processed through the system, and typically within an EDI system like that, the supplier will get notifications saying their invoice has been approved, their invoice will be in the next payment run, etc. Again, you want to be constantly, you want to improve your real-time reporting capabilities. So you want to be looking to see, is it possible through technology? We mentioned, APIs and feeds with your bank accounts. Reconcile your accounts payable ledger as soon as possible. Again, you want to be able to look at your ledger and know that the information that it has there is correct, accurate, and timely. And again, you need to teach your suppliers good practices. Don't pay inaccurate invoices and then look for a credit note. Simply, if the invoice is inaccurate, incorrect, doesn't have the details that you require, reject it, send it back to the supplier. And again, as we mentioned previously, clear communications with the supplier. This is what we require on the invoices. Please complete, and then we'll arrange payment. I think as well, you want to be able to run your reports. You want to be able to look at your, what your liabilities are, what your outstandings are by vendor, by payment terms. As soon as you process a payment to a vendor, you want to mark it on your ledger there and then that it's paid. Again, it's giving you real-time accurate information, allowing you to better forecast your cash flow, and also if queries or questions come in from the vendors in regards to payments, whatever team member is dealing with it can answer that question accurately first time.
Yeah.
Any unresolved, unreconciled issues, deal with them immediately. Talk to your vendors. Talk to their team. Reconcile it, clean it up, and keep your ledger tidy. And then my personal favorite, and the main is, I always like remittance advice. I think it helps the accounting team in your vendors to correctly allocate the payment. It means you're less likely to be getting queries back in relation to what invoice was that payment for, or people chasing invoices that you've already marked as paid. Yeah. Most systems will send out a remittance advice confirming what invoice has been paid or what partial payment is made. Just makes life easier for everybody.
I love that you're you're obviously a really good process guy. You like your process and your checks and balances. That's my kind of guy. I wondered on that one, Matthew, have you got anything to add from a TransferMate perspective? And in terms of technology, can technology make payments faster? It sounds like you'd say yes.
100% I'll say yes. And there's actually a few things that I'm going to 100% agree with Warren over there. And firstly is, when making a payment to your supplier, sending them a notification that, hey, this has been paid, this invoice specific has been paid, or these groups of invoices have been paid. but also matching that up on the payment. If the payment comes into the supplier's bank account and there's no remittance advice, it's going to be very hard for them to match that up, because all that they're going to see is an amount come in. And if this is a global payment, there's there is a huge chance that there's going to be global lifting fees. So each bank in the SWIFT network is going to take a fee for essentially passing a message along from one bank to the next. So the amount coming in is not going to match what was on that invoice. And there's also a high possibility that the remittance advice that you attached, let's just take, for example, invoice payment 1234, might no longer be attached to that payment. It might come in with a SP number or a SWIFT reconciliation number. So that's going to be very hard for your supplier to match up you saying that you paid the invoice, but them actually looking at their incoming statement on their bank and going, oh, we can't find this payment. Where is it? And then there's going to be back and forth going, can you trace it? Can you show me the transfer receipt? How you know, and that creates inefficiencies. And then the second piece that Warren said there was the reconciling the accounts receivable ledger, which is very similar to what I was saying on the payment side. But when companies actually get the funds, making sure that everything matches correctly is paramount. And TransferMate kind of tackles both of those issues. So when we make a payment, we utilize domestic payment rails. So let's just take, for example, a payment going from Ireland to the US. We would actually receive the funds in Ireland and remit them in the US via the domestic payment rail. But because we're remitting in that payment or paying that payment out on the domestic payment rail, the actual narrative or the remittance narrative is going to stay attached to that payment, because it's no longer going from bank to bank through a SWIFT network. So it is just the client, us, the beneficiary. But also in reverse, we work very closely with, we actually launched a product with Wells Fargo there about a year and a half, 2 years ago, which is Global Invoice Connect, where their clients invoicing internationally actually utilize TransferMate's technology in order to receive the payment domestically from their international clients. So that's a mouthful.
Yeah,
but what it does allow is it does allow the ledger to be updated correctly, because that remittance advice, again, that narrative is going to travel with that payment correctly. But also because it's domestic payment to domestic payment now, and not an international payment. Essentially, that payment is going to be received or sent much faster.
More. Yeah,
exactly. So knocking days off of payment that would go from the UK to the US, which could be 3 to 4 working days, is going to be a same/next day payment received in the account in full with the correct narrative, or receiving funds exactly the same way, which would be a next day, if not same day payment, again, received in full with the correct narrative. So utilizing technologies like that can plug directly into your accounts receivable, accounts payable software is of huge importance to our customers, at least, and our banking partners.
That's and a great example as well. A great working example in terms of the example around Ireland US payments. So brilliant. Thank you both for that thorough answer. We were going to do an audience poll. This is on demand, so of course we're not going to do an audience poll live as we speak, but be interesting if you just look at those. So people watching this on demand, your biggest challenge operating a global business, and there's some ideas. It'd be really interesting if ever you want a dialogue and discussion with us. It'd be very interesting to pick up with you what your challenges are. I'm going to move on to our final question, our final subject with the questions, and then ask a couple of questions after this. So final subject here, the alternative and gaining that competitive advantage. Mathew, I'm going to go to you and I'll ask both of these questions in one. What's the alternative? How is TransferMate different? And what technology is available? We've talked a lot about this through our webinar. But if you could sort of somehow pop that up for us briefly, you know, love your perspective on that alternative.
Yeah, perfect. So we can actually hop onto the next slide and I'll actually take you directly through that. So the main difference is that traditional cross-border payments are really going from the client in let's just take, for example, in the UK, and you are sending through your domestic bank and it needs to get to the recipient's country, which could be in the US or Australia or China, it doesn't matter, anywhere in the world. Your bank doesn't have a relationship. So your local bank doesn't have a relationship with the recipient's bank wherever they are in the world. So normally what happens is that Bank A has to utilize the relationship with Bank B to go through Bank C, to go through Bank D, to finally pay the beneficiary's funds into their account. Now, all of this creates time delays. It also creates handling issues. And there's also fees, so it makes it a very expensive process. And then, like I said earlier, it also makes reconciliation issues, because that narrative that you attach to your payment, invoice 12345, has now become a very long SP number or not attached at all. And because there's handling fees by all of these banks in this chain, the amount sent is not going to equal the amount received. So it makes it very, very hard to reconcile the payments, whereas TransferMate uses domestic payment rails. So we are globally regulated. So it allows us to operate over 400 bank accounts globally around the world and utilize domestic payment rails. So in the UK, we would utilize the three majors. So that would be Faster Payments, BACS, and CHAPS. And then in the US, we would use wires, ACH payments, all things like that. So we really are plugging into domestic payment rails, which means that TransferMate is in control of the funds the entire time. And it means that we're in control of the narrative as well. But it also means that because it's only TransferMate in that chain, what happens there is that whole chain is now shortened, and the payment now is going to reach your beneficiary much, much faster, knocking days off of the time that the payment is going to take to get to your beneficiary. So, a client can either take advantage of, they can hold the payment, they can hold their funds for a little bit longer in their account before they need to release the payment, but still get to take advantage of early payment terms, discounts, or anything like that that's been negotiated in the contracts, which is obviously a win-win situation for both the supplier and the client. Do you mind going on to the next slide,
sure.
please? And then, like I was saying, why TransferMate? And it really is that we provide a full 360-degree payments and receivables service. So we are fully regulated. We have over 80 regulators around the world that we report into, and we have domestic in-country regulators. We offer highly competitive foreign currency rates with no additional fees to either the sender or the receiver, which is huge because it allows the beneficiary to instantly know that their funds, that the amount invoiced is the amount of the funds received. We are also fully transparent, and I know Warren earlier kind of referred to transparency and visibility on the payment. So notifying a client or your customer that your supplier that we've made the payment, but TransferMate also allows you to actually notify your supplier or your beneficiary that, hi, TransferMate has now made that payment. The expected date of arrival of the funds in your account or value date is going to be X. And instantly they know that it's going to be there. They know what the narrative is going to be, and they know the day it's going to be in their account, providing full transparency to both sides, because then you know that payment is paid. You know that the date that payment is going to be in your supplier's account, and your supplier knows the exact same information. And it also allows you to reconcile back into your systems. One of the huge things that we do is ERP integrations. And we found that our clients absolutely love the automatic updates that we provided for the foreign currency gain and loss fields, without them having to actually go in and actually manually input that into their systems. Which was, accountants absolutely loved that.
I can imagine. I can imagine. And it seems to me as well, Mathew, that you're talking about exchange rates and you're talking about fees. I mean, that would be a big differentiator from the banks, wouldn't it?
Huge, and it's also why banks are utilizing TransferMate. Take, for example, our relationship with Wells Fargo on the Global Invoice Connect. Also, it is also why Allied Irish Bank and ING, one of the largest banks in Europe, have actually invested in TransferMate, because the technology works. That we are highly competitive, and they want to utilize our services for their clients. So having those three very large banking partners standing behind us is absolutely massive. And also, it's not just an investment; they are partners of ours as well.
Yeah.
So it's not just that they're actually introducing us to their clients. They're launching services and products with us that their clients are absolutely loving. And we're going to have a lot more of these partnerships coming online over the next few weeks and months.
That's you touch on something. It's one of the questions actually that I was going to move on to is that relationship with banks, really, banks fitting into the picture. So so actually you could see banks as being competitors in certain situations. If if we have organizations here that would be considered clients paying their suppliers, actually, you'd think that TransferMate as an organization could be a competitor to a bank, but as you just mentioned, you're also partners with banks. Is there still a need for banks in relationships with buyers paying suppliers now? Or can TransferMate replace it, or organizations like TransferMate, do they replace it all? So where do banks fit into the picture?
I mean, banks are integral to what we do. You have to have a bank account where you have your funds, and companies these days companies are relying on banks more and more at the moment for invoice discounting or factoring, depending where in the world you are, and also for working capital, where TransferMate doesn't touch that side of the relationship. Where we do partner with banks is very much in the international payments and receivables scene. It's very expensive for banks to maintain relationships with hundreds or thousands of other banks around the world in multiple different jurisdictions, and by banks being able to utilize what TransferMate is doing around the world with our global licenses, our regulation, and our banking partners is that they find that they can actually trim down on that a lot by utilizing our technology and our regulation, which obviously reduces risk for banks. So banks are our partners. We don't see them as they provide a very, very needed service to their clients. But yes, some people say that they are competitors, but we in TransferMate see banks as partners.
Got it.
100%.
Brilliant. And I've got one more question that I'll start with Warren on this one. Warren, we've talked about a few topics today, and with subjects and questions underneath those subjects. When we think about the audience listening into this, and we may have people on here from large organisations and smaller organisations. What is the relevance of what we've talked about today? Is this for companies of all sizes, or is it just for large companies, what we're talking about?
Absolutely, it's for companies of all sizes. I think technology, maybe a number of years ago, the technology to do a lot of what we talked about would have been beyond the reach of smaller companies. That's no longer the case. There are lots of products and providers out there that offer the functionality required for the smaller business, not as sophisticated, but at a price point that they can use, and they can have control and they can have visibility over their finances unlike they have ever had in the past.
Yeah, I think that's the answer I wanted to hear, and I think, as you said, it's accessible. The pricing is accessible for all organisations, and no matter what size you are, you want control. You want control, and you want visibility, don't you? So
you do, and
that's interesting.
I think the key really is for smaller to medium organisations. It's to reach out to people who might be able to help them. There's the likes of yourself, there's so much technology coming along, it's so hard to keep up on it, but the likes of ourselves, we see best practice in a wide range of businesses and scales. That's where you can get the advice that you need to make the change.
Brilliant. Well, that is that's the end of our webinar. These are the questions that were asked. I'm delighted that we had this conversation, and I think it's uncovered some really interesting areas to dig into. I hope you've enjoyed listening to it. And again, if you have any questions or thoughts or feedback, please do get in touch with us at TransferMate. Mathew and Warren, thank you so much for the really open and interesting responses you gave to all of the subjects that you talked about. It really was interesting to listen to, and the different perspectives as well. So thank you very much for that, and I hope you enjoy listening to this webinar. Thank you, everybody.